G'day, Chris Booth from Lydian Finance. Booth, it's good to catch up. So I was interested to know how's business going in the mortgage market at Lydian? What have the volumes been like? And are you seeing any changing trends? So what can you tell us?
Yes, I mean, look, so far, fingers crossed, we've been busy, so there is still a lot of clients looking to, refinance and get those really, really cheap rates, which is keeping us active. Still getting quite a lot of first home buyers coming to see us. So we're doing, the work around getting them locked in, also getting them locked in with the first home deposit schemes as well, the first home loan deposit schemes as well. So that's keeping us busy. And then, finally, we are seeing a few of our clients actually being successful in these online auctions. I think this type of bidding has suited a few of our clients, and they've been keeping us busy. So we're getting a nice mix of business right now, whereas before, probably a little bit more of the owner occupier purchasing. We are starting to see a few investors come back now as well. So having a few conversations about tapping into equity and what next and where should we buy. So it's interesting.
That's one of the really interesting points at the moment. Are you seeing any changes in terms of mortgage volumes? Has there been a drop off in inquiry in Victoria while people wait, or is it kind of business as usual for you guys?
To be honest, we're still getting lots of inquiries. People still, have got goals, and even though we're locked down and possibly can't buy that property, or not a bit uncomfortable about buying the property right now, people are still wanting to get their finance locked in. I think the big thing for me is a few of the clients that we've actually got down in Victoria in particular, they're thinking that the property prices may peter off a little bit if these properties aren't clearing and selling at auction, then prices may well dip. But for me right now, the pressure in Sydney is too great, and prices are still going up. So I think we'll see people get more comfortable in Victoria again, and these auction rates will clear. I'm really keen to see what happens in springtime when, once we get through this vaccination program. Let's see what happens. I mean, there's got to be a lot of pent up demand to sell property and tap into the values that we're seeing today, I hope.
Yeah, and we can see in the stock listing figures, and we can certainly see as property buyers, there's not really that much stock on the market at the moment. So it's pretty difficult for prices to fall in cities like Sydney and Brisbane, and to a large degree, Canberra, Hobart, Adelaide. There's just so few properties on the market and plenty of demand for them that it's just a bit of a pressure cooker situation. Now, Chris, I know you've got a bit of a banking background. And there's been a bit going on in terms of monetary policy, and it looked for a while there the Aussie economy was booming back and everything was going nicely, falling unemployment rates, and the word on the street was that the Reserve Bank was going to taper off its quantitative easing stimulus, but it looks like that now might be delayed. So I noticed that there's been some changes to lending rates at one of the major banks. I think sort of variable rate at under 2%. So are you seeing any changes to banking lending rates? And has there been any changes in appetite for lending from banks?
Yeah, so I think the lender you're talking about is Westpac. So, but there is a real fight right now to price for risk, and I talk about risk with regards to the loan to value ratio of the deal. So that's where most of the appetite to fight for these really low risk transactions, good quality properties, 60% or less loan to value ratio, and the banks are providing extremely cheap rates. So like you saw before, the 1.99% has got a heavy discount from the standard variable at Westpac. Others like 86 400 have got a 1.85% 3-year fix. So incredibly cheap rates still. I'm not sure what the net interest margin on these products would be from a banking perspective. They can't be making much from it. But obviously, once you've got the client in, then you can look at the higher rates. So pricing from risk for risk is interesting. Another product niche which has just come out, and again, it's 86 400, who were just recently acquired by NAB, but they've got an 85% no LMI deal right now, which is pretty that's a pretty strong offer to prospective new buyers, or even people who've owned property before. So that lower deposit, but again, you've got to be a really strong servicing client for that product. So again, the movement with the lenders right now is pricing for risk, which is quite interesting, which is for lower loan to value ratios. And I think they're just trying to retain quite a lot of business as well, because there has been a flight to some of these really cheap interest rates with refinances of late as well.
Yeah, it's interesting to see, isn't it? I mean, there's a lot of talk about fixed rates bottoming out and interest rates potentially rising a bit, but
Mm.
there's so many people refinancing off old loans at 3, 4, 5%, and then coming down onto lower rates. That the average rate across the market is still trending down. I think actually on that point, I mean, we have a lot of property investors that come to us, and it seems that a lot of investors are now coming back into the market after a bit of a hiatus. So in terms of property investor strategy, obviously interest-only loans were out of favor for a long period of time there, but they seem to be coming back. What about in terms of fixed versus variable rates? Have you seen any trends recently that are worthy of note, and any tips for investors who are unsure of where to go?
Yes, certainly for us, if we've got an investor who is buying a new property and has also got some non-deductible debt, we are discussing fixed rates for that asset. It's a long-term asset. The rates are really cheap and much cheaper than the variable right now. So it does make sense from a cash flow perspective to do interest-only fixed for those type of loans. Keep the variable product variable with the home loan variable with offset, and you've got the flexibility to retire that debt as quickly as possible. So that's the conversations we're having. But as well as that, the owner occupiers are coming in and fixing part of their loans. I mean, if it's I think we've got a 1.89% 2-year rate right now. I mean, that's extremely cheap money. The variable rates are sort of more like 2.5%. So you can save a little bit of money on that. When you said before about interest only, it's a really good time to renegotiate those interest only loans. The lenders, it is a service. It's another application to do that. But we're having a lot of success in restructuring and redoing the loans, even if it means you've got to extend the term of the contract to get that interest-only period reset. The banks are pretty open to doing that right now. There's a lot more flexibility and appetite in the credit that we're seeing. So especially mature borrowers. So crazily, you think by the time you get to 50, which is my age, you've got no home to borrow again and you can't do interest only. But that's not the case. As long as you've got a strong asset position, we can mitigate that risk with the lenders, and they're happy to provide a 30-year term and again have 5 years interest only. So for me, that would mean retiring that debt at 80, but I've got 5 years of interest only repayments just to manage the cash flow. So yeah, there's lots of lenders who'll support us.
I didn't think you're anywhere near that old, Chris. Finally, to wrap up, I think people are always interested to hear in terms of market trends and where people are buying. Some of the inquiries we've been getting recently as buyers agents, markets like Newcastle and Cessnock in New South Wales, Gold Coast has come onto the radar quite a bit. Also Adelaide, I think people are seeing the benefits of the higher yield. So there is some, I guess there's been some kind of a shift away from just the Sydney and Melbourne centric approach, especially for investors. Any trends that you're seeing with your inquiries and your clients?
Yeah, very much so. So that acquisition of an investment property or a lifestyle property in some of the sort of satellite suburbs of Sydney. So I'm talking Central Coast. We've seen quite a few clients move to Newcastle for lifestyle. As you said before, these areas you can work from home now and you've got good internet connection. It's quite a nice thing. My best friend just bought up in Holgate just recently, which is a beautiful spot, and he works from home there as well. And that was that's really pushed those prices higher, but it's a good asset long term as well. I've got a property in Newcastle, so I follow the Newcastle market pretty closely, and that's done extremely well. Again, it's lifestyle, but it's also an affordable investment property as well. There's a lot of students and infrastructure in there to make sure that you've got good or low vacancy rates and strong tenants. So yeah, look, that's definitely the what we're seeing as well. The other thing I'm seeing, we're having a few conversations now is Olympics 2032. Are you having much of a conversation about that up in Brisbane?
Yeah, hopefully the international border will be open by 2032. The way the quarantine facility rollout is going, it's not a shoe-in. But I think there will be an infrastructure boost for Brisbane. Obviously, that's some way in the future, but I think it's just another sort of tick mark for Brisbane. It's a popular city. A lot of people do tend to relocate from Sydney up to Brisbane for the affordability, and more recently, we're seeing a lot of people from Victoria ending up in southeast Queensland as well. And I think the lockdown restrictions have accelerated that a bit over the past 18 months. So yeah, it's definitely it's another boost for Brisbane. It will take obviously some time for the investment to flow through. So, but it's, I'm a big fan. Lived in Brisbane for a number of years in New Farm. It's a super part of the world, and I think its stock is pretty tight in Brisbane at the moment. So it's going through a bit of a boom at the moment. So I think that's a really good set of insights, Chris. I think if people want to know a bit more about Lydian and or they need some assistance in terms of mortgage refinancing or writing a new loan, where can they go to find out a bit more?
Yeah, just jump on the website www.lydian.com.au, and might look up. All the brokers are on there. Our mobile numbers are on there. Our email addresses are on there, so we're contactable. Or jump into LinkedIn and connect that way.
Thanks for joining us as always, Chris, and look forward to the next round of insights and speak soon.
Cheers, Pete. Bye now.